As the U.S. markets are closed for the weekend, we are looking at the closing figures from Friday, October 31st, 2025. Lumen Technologies, ticker LUMN, ended an extraordinarily volatile session at $10.27 per share. In after-hours action, it settled slightly lower at $10.23. Now, if you just glanced at that closing price, you would miss the entire story, because Friday was one of the wildest days this stock has seen in a long time. After reporting earnings the night before, the stock traded in a massive range from a low of $8.14 to a high of $10.40. That is a 27% swing, a level of volatility you might expect from a small-cap biotech, not a legacy telecommunications firm. This isn't a simple investment, it's a battleground. And what's fascinating is the disconnect, because the initial reaction to their Q3 earnings on Thursday night was negative. The stock actually fell 6% in the after-hours session. Investors saw the headline 4.2% year-over-year revenue decline and immediately hit the sell button, thinking it was the same old story. That was the expectation. The reality, which set in during Friday's session and caused that massive reversal, is buried deeper in the report. A new $1 billion tranche of deals for what Lumen calls its private connectivity fabric, bringing the total deal value for this new AI-focused product to over $10 billion. This is the entire tension of Lumen in a nutshell. The market expectation is that this is a dying telecom, a relic of the copper wire age saddled with an insurmountable mountain of debt. For much of 2023, the stock traded for under $1, a classic cigar butt investment that most people wouldn't touch. You certainly wouldn't find it in a passively managed portfolio like Schwab Intelligent Portfolios, which is designed to avoid this exact kind of single stock risk. The common belief is that this company is in a terminal decline, just harvesting its old assets until it hands the keys over to creditors. But the reality management is pushing, and that the market is finally starting to buy, is that Lumen is not a phone company. It is an AI infrastructure company that just happens to be trapped inside a phone company's body. The bull case is that its 350,000 route miles of fiber optic cable are the true undervalued asset. It's not the next NVIDIA stock making the chips. It's the physical toll road that all of NVIDIA's data has to travel on. This pivot is what's driving the narrative, and it's why the stock has seen a parabolic move, up nearly 50% in the last 2 weeks alone. Let's dissect that trading action because it's what matters most right now. The volume on Friday was immense, nearly 50 million shares, which is more than double its 30-day average. This isn't quiet accumulation. This is an all-out war between buyers who believe in the AI story and sellers who are looking at the still negative earnings per share and the shrinking top line. The short-term technicals are flashing buy signals based on this momentum, which is why you're likely seeing a flood of activity from retail traders on platforms like the Robinhood app or SoFi Invest. They see a low-price stock that has surged from its lows and they're chasing the momentum. But this is not Apple stock. It does not have a fortress balance sheet. This is a high-stakes bet on a corporate turnaround. The professional investors, the ones using interactive brokers to analyze derivative markets, or the portfolio managers at Fidelity Wealth Management, are looking at something completely different. They're modeling the debt. They're looking at the recent refinancing of $2.4 billion in loans and the new $425 million notes offering. These moves don't add revenue, but they are critical. They push debt maturities out from 2030 to 2034 and save the company over $30 million in annual interest payments. This is a company buying itself time. So what does Lumen actually do? The company has tried to make this simple by breaking its business into segments. You have the harvest segment, which is the legacy voice and copper wire business. This is shrinking, and they want it to. Then you have the grow segment, which is the enterprise fiber and cloud connectivity, the part they point to when they talk about AI. In their Q3 report, the overall business revenue was down 3.2%, and the mass market segment was down 7.7%. These are not good numbers in a vacuum. But the $10 billion in total PCF deals is the bull argument. Management claims this will translate into a $400 to $500 million recurring revenue stream by 2028. Furthermore, they are simplifying the story by selling their consumer fiber-to-the-home business, Quantum Fiber, to AT&T for $5.75 billion. When that deal closes in early 2026, it will dump a huge pile of cash onto the balance sheet, which can be used to pay down more debt and will complete Lumen's Lumen's transformation into a pure-play and AI infrastructure provider. This is the strategic-level chess game being played, far removed from the day-to-day stock chart. Now let's talk about the elephant in the room, the analyst ratings. This is where the expectation versus reality gap becomes a canyon. Right now, the consensus rating from 7 analysts who cover LUMN is technically a buy. But, and this is one of the biggest buts on Wall Street, the average price target is $5.34. The stock closed Friday at $10.27. This means Wall Street's buy rating comes with a forecast that the stock will be cut in half. This is a stunning disconnect. It tells us that analysts believe in the long-term idea of the turnaround, hence the buy, but they believe the recent 500+% run-up from the 2023 lows has gotten way ahead of itself. They are looking at the fundamentals, which are still a company with negative earnings, and comparing it to the price, which has gone vertical. This is a classic momentum versus value collision. The momentum traders on Robinhood are winning the battle, but the value-focused analysts at firms that build Fidelity ETFs are warning of a massive correction. This makes the institutional and insider sentiment even more important. According to recent filings, 895 institutions own the stock. The big indexers are all there: BlackRock, Vanguard, State Street. This is common for a stock of this size. What's not common is the insider activity. Over the last year, insiders have been aggressively buying. 18 different insiders have been purchasing shares on the open market, buying far more than they have sold. This is a powerful signal. It means the management team, the people with the most intimate knowledge of the debt negotiations and the AI deal pipeline, are putting their own personal capital on the line. They are betting that the market and even the analysts are wrong about the true value of these fiber assets. When you're looking at a complex investment, insider buying is one of the clearest signals you can get, and it's pointing in a very positive direction, directly contradicting those bearish price targets. This isn't a stock you just add to your individual brokerage account and forget about. It requires active monitoring of this kind of data. So what is the future outlook? The bear case is simple. The analyst price targets are correct. The recent rally is a speculative bubble driven by AI hype and a short squeeze. The $18 billion in total debt is still a ticking bomb, and the 4.2% revenue decline shows that the legacy business is melting faster than the new grow business can replace it. In this scenario, the stock will collapse back to the single digits as momentum fades and the weight of the debt returns to focus. This isn't Tesla stock, which can fund itself by issuing new shares at high valuations. Lumen's survival depends on refinancing debt and generating real cash flow. The bull case is equally compelling. The bear case is looking in the rear-view mirror. The sale of the consumer division to AT&T will be a massive catalyst, providing a cash infusion to clean up the balance sheet. The insider buying is the smart money telling you the stock is still cheap, and most importantly, the $10 billion in PCF contracts is the proof that the AI narrative is real. The market is just beginning to reprice Lumen not as a broken telco, but as a critical infrastructure asset. Bulls believe the fiber network alone is worth more than the entire company's current market cap, and the debt is now manageable. They see the Q3 earnings with its beat on EPS and revenue as the first tangible sign that the turnaround is taking the hold. Comment below what you think that fiber network is truly worth per share. Do you think it's worth more than the $10.27 the market is paying for the whole company? Ultimately, the story of Lumen is one of the most fascinating on the market. It's a binary bet on management's ability to execute a difficult pivot. The expectation was bankruptcy. The reality is a company that has successfully refinanced its debt, is selling off non-core assets for billions, and is landing massive decade-long contracts to power the AI boom. The stock's recent volatility is simply the market trying to violently price in this new reality against the old dying narrative. It is not a stock for self-investing beginners or for those who prefer the steady, curated nature of online investment platforms like SoFi's robo-advisor. It's a high-risk, high-reward special situation, and the battle between the bulls and the bears, as we saw on Friday, is just getting started. Disclaimer. This content is for educational and informative purposes only. It should not be considered financial or investment advice. Always do your own research or consult a certified financial advisor before making any investment decisions. If you found this helpful, don't forget to like, comment, and share this post.